Okay, guys, welcome to the next one. This is the 730 strategy. We call this we used to call it the AFX school run strategy, but we changed it up to the raid and return, the AFX RR model. So effectively, what the strategy is, um, you mark out 730 to 740. You guys should, like I showed you guys in the previous session, London session 730 to 740, mark that out, switch all of those other ones off, max minimum range, keep all of that on. And basically, right, you'll be marked out for you, okay? So now what you can expect, 730 will come in, there's a lot of volume. You'll notice we were consolidating, 730 came in and we pushed down. Okay, right? Then what happened? We came back up and we returned. So raid and return. So we returned back into this blue box, right? So I'll show you more examples. Okay, raided, returned, raid and return, raid and return, raid and return. Done. Okay, there gonna be days like this one here where market just pumped all the way down. But eventually it will have to come back. So there are gonna be losses. There are gonna be losses. Okay, yeah, what happened here? Okay, yeah, we pushed up and then we failed. We just failed to hit our full TP there. But that's basically what the strategy is. So out of the 3 days in this last week, you would have probably hit in the past two. So I'll show you guys more examples here, and we'll go through some examples, right? It's not an orb strategy where you're gonna look for breakout. It's more CRT strategy. Right? Okay, this is a day where you communicated for some time, and that was a bit crazy there, right? Okay, so let's just go back to last week. All right, you guys get the idea. Okay, we took the low, target the high. It's effectively what we are doing. All right, let's check this out. Right, so 730, 740 marked out. We pushed down. Now, what I'm looking for is, of course, I want to go onto my 5 minute time frame. All right, just go quickly to backward to Monday. Monday. Here we go. Monday. Let's go replay. Start new. Uh, right. So now the next thing that I want to do is, of course, I want to mark out a 5 minute fair value gap. Okay. So you're gonna mark out your 5 minute fair value gaps, and that is what I will use for my reversal points, right? So I use these points right here as points of reversal. Here, what happened here is we just completely disrespected it, and we just couldn't push down, right? So what do we do? Okay, let's just go a little bit back. So we're gonna look here. You're gonna wait for market to tap into this fair value gap and respect it. That's what we're looking at. Okay, so let's just play this out. Tapped into it, respected it, and I want to look for some sort of IFEG basically, or even FEG is fine. You can still enter off an FEG. I would say like an IFEG is probably my favorite way of entering of a reversal trade. But let's just look at how this goes. So it's not the best of IFEGs. Okay, we failed to even break above here. So yeah, even yet, this is not an IFEG here. Right, so you're gonna wait for some sort of structure to form. Okay, yeah, some bit more structured. No IFEG still. It formed here, but that's not the best of IFEGs. Okay, so guys, another thing about IFEGs, right? When you have stuff with rejecting like this, like I'm telling you now, this is not the best of FEGs that you want to be looking for. You want to rather see like one or two candles, maybe. You want to see three rejections like this. We rejected 3 times and then we broke out. Not the best of entries. And then it just pushes up. I will not enter from there. I would rather see at least maybe one or two decent candles. Like, and then we push up. So it shows me that there's buyers that actually, they come into the game. Right. So we just mark this out. We tapped into it there. Can really enter there as well. I would rather wait for us to break this high here Or if we push down lower and we start creating a bit more structure lower, then I will look for a trade here. So you can see we rejected off this high, we failed to break that high. So and we just pumped down low, right? So now we just wait. Okay, here's a bit of structure. Okay, I would actually take a trade here. Once it closes, I would prefer to take a trade if it closes here. But we'll take a look at this one. Right, just see how it respects it here. Ideally, what I've wanted, right? If was we close the path here. Like I said, I don't like to take trades in the higher time for FEGs. I prefer to take it outside of the FEGs, right? Because you can ping pong between them. Okay, so we look here, let's look at more examples, right? Let's continue looking here. Okay, yeah, it's pushing up again. We got this FEG still waiting here. Okay, still rejecting. You see what I'm talking about, guys? It will reject a lot of times, so wait for it to actually break out of that FEG, then you start looking for trades. Yeah, again. Still nothing. Finally, a bit more power there. The buyers. It's still they rejected off this previous IFEG there. So it's taking a bit of time. Okay, finally there's some movement there. But we don't really see any sort of IFEG here. So you're gonna wait for some sort of retracement into an FEG or something. There isn't really any IFEG, as you guys can see. You just have this massive candle here. So I'll wait for some sort of structure to form here again. Right. Still nothing. Still retracing. We're still dropping lower. Okay, finally, there we go. Bit of structure here. And we created it. I wouldn't take a trade off here. You guys might think I'm just being funny here, but this is how trading is. You have to wait for the perfect confirmations. So we have this IFEG here, and we still basically we tapped into it here. We respected it. So I'll maybe look at taking this trade here. So take a trade off here. Stop loss will go at the bottom. If you go on your 5-minute time frame of that FEG that we formed, we took our entry from. So we're gonna go here. So we look on your 5-minute time frame, stop loss will be there. It's about 700 pips TP. We know where our TP is. Our TP is gonna be all the way up here. Right, so it's a 1:3 risk to reward ratio we're looking at. So gonna be a long trade. Let's just see how this plays out. Okay, and played out perfectly. Right. So it did take a bit of time. It took us about from 7:30. It took us about 1.5 hours, but the reward was there. It took a 1:3 risk to reward ratio. We waited for confirmations. We didn't just rush into the trade, and we got the 1:3 risk to reward ratio, right? So we had to wait because there was a lot of, like I said, we don't really take trades when we inside this FEG. We don't take trades inside here, and there wasn't really any good. And the reason why we never take here is we rejected too many times. So this buy was not really that strong. Okay, and we didn't really have any like a market structure shift or some of that sort. So no, that's a no for me. So I wouldn't really take it. Then finally, when we broke above again, okay, I waited for some sort of waited for us to come and basically inverse this gap here. But because we pushed up too much here, preferably I would have wanted something like here, around here, about 4309.703. Then we retrace back into it here, and then I would take my buy from there. Right, that would be a valid buy for me. That's basically the RR model. Okay, some days it's quick, some days it takes long like this. But 1.5 hours to get a trade, and it took us about 10:30 to basically eat our full TP, but it was well worth it. I mean, you could have held the runner if you wanted to even, but I would say just stick to the plan. 1:3 risk to reward ratio. So this was Monday. Okay. I want to go now to Tuesday. Let's look at Tuesday, 7:30. Right. Okay, I also want to mark on my 1 hour FEGs. I forgot about that. but just mark them out. You're not going to really take trades of it, but it will give you more or less an idea of what's happening with the market. It'll give you a bit more guide with the structure as well. So we can see we're rejecting off this 1 hour gap here. So possible sells. We got two 1 hour gaps here. So possibly we could be looking for, maybe we might buy up, right? 730 might spike back up and we might drop from there. But let's just see. Right, let's look at this. We got our 1 hour here. Let's look at this now. Okay, and also your 5 minutes, remember, right? So let's just wait for 730 to form first. Okay, so as immediately 730 came and we just pushed all the way down. So now what do we do? What do we do from here? Right, you can see we took out this low over here. We took out the low, so we know what we're gonna do. We're looking for buys, right? We're gonna look for buying opportunities, and we're gonna look at a 5-minute FVG. Okay, do I see any 5-minute FVG? I don't see anything here. I see here. Okay, so I'm gonna mark this out. Is this unfold here as well? So we've got these two fair value gaps here. We're gonna just look at which one market respects first. If the market respects the first one, we'll take the first one. Okay, and then okay, that was a bit. Let's go too fast there. Okay, and it did actually just respect the first one there. But yeah, so we respected the first one. You're gonna go in your 1 minute time frame. We're gonna wait for a high to get taken out like that to create a bit of market structure shift. Then you're only gonna look for an entry once we have an IFEG. So ideally, I would want something like this, or if we do somehow if we do like have an impulse candle where we're pushing above, I would want to see a retracement. So we're gonna look now. Let's see how this goes. Okay, so we came back to this 1 5-minute fair value gap here, right? Okay, so we closed above, but there we go, close above. And this is kind of ideal what I would actually take a trade off. It's nothing too crazy when we're pushing all the way up here. You'll just get cooked, you just cook yourself completely. You don't want to wait. I would prefer like a decent 50% candle that's sticking out and we're pushing from there. So we'll take a trade here. Stop loss, remember, below the 5-minute FVG. So we're looking at here. Yeah, TP all the way up there. So here we're looking at it as a 1:4, but it's not as big as the first other TP. But let's just see how this plays out. Okay, I went into a bit of drawdown. It did. Let's see if it does hit TP, and there we go. TP hit. Right, you guys see how this basically turned out. So it played a lot on this 5-minute FEG here. Did respect it, right? And then it just pushed up afterwards. And it hit our full target. So we did go into about how many pips? So 500 pips drawdown. As long as you have a stop loss, you should be fine. And if you have to look at this, you got about 1:5, 1:1.5, R 1:4.5 RR. So that's about 1:5 basically. Stop loss below here. That's basically where you would have went for your stop loss, and your TP got hit there. Right. So that's basically it for Tuesday. I mean, this was a bit more quicker, I think. By 9 o'clock, done for the day. Sorry, 10 o'clock, done for the day. That's the RR model, guys. Okay, you see there's a bit of a combination. After this move here, right, remember, right, there will be some days it's not going to play out. Okay, this Monday and Tuesday played out. Let's look at Wednesday. Let's go to Wednesday. I think Wednesday played out also. Right. Let's just go 1 hour time frame quickly. Tigers. Okay, so we did reject off this 1 hour gap here, you can see. So like we were likewise, the other one we might push up and then we push down. Go on your 1 minute time frame. Let's wait. Let's look at 730. What does 730 give us? Wait, this is today. Wait. Let's go. We want Wednesday. Okay, so we still have that 1 hour gap there, right? Okay, so we still have this 1 hour gap. We did get inverse and then we just pushed all the way down afterwards. Alright, but let's look at this now. Let's look at Wednesday. Okay, so we pushed it down again. There was no real FEGs here. So we'll just keep this for now. Just mark this out here. So just okay, this. This is still unfull, I think. No, just about full. Wait, let's go on to 1 minute. There isn't any 15 minutes, sorry. There isn't any nothing on the 15 minute. Sorry, nothing on the 1 hour, so we look at the 15 minute. Right, remember. If you don't see anything there, you'll see something on the 15 minute. That's my next resort. 15 minutes is marked out. Right, let's go now. 1 minute time frame. Let's play this thing out. Okay, so you can see how we immediately pushed up. Let's see how we play out from here. Okay, low has been taken, guys. This doesn't look like a very big trade. I'll wait for this structure shift there. We got it there. Let's mark out this. Close above now. Of course, what I want to see is some sort of retracement. Ideally, of course, I would want to wait for retracement here. But there isn't any. Let me just check the 5 minute quickly. Something what's happened in the 5 minute time frame. Okay, so we are also above this 5 minute FEG here. Okay, so I forgot to look at this. This we got the 5 minute FEG. We basically create an inverse fair value gap. So we can start looking for buys in this case scenario, right? We inverse the 5 minute. So we look for some sort of retracement. Do we get the retracement? Don't get the retracement, it's fine. Come back the next day. Okay, doesn't look like we can get a retracement. And TP got it. Okay, that's basically it. If you did take a trade here, I mean there isn't really any confirmations that I would actually see. Other than okay, we just tapped into the 5 minute and then we just shot up from there. So there wasn't really any confirmations for me if we actually take this trade. So I wouldn't take this trade. This is one of those days. It is what it is. Okay, so this was Wednesday. Let's look at Thursday. Thursday, I think we just dumped. I think it didn't really come back here. Just look at the 5 minute quickly. Okay, we got this massive unfull gap here. I don't think this got filled as yet as well, so let's mark it out though. Let's go, and then also let's go on the 1 minute time frame. I think also on all time frames that fair value gap is unfilled. Right, let's just see. 730K we push down. I'm gonna look for a fair value gap. Looks like we might be buying. So I'll mark this out here. I think we just dumped from here. Okay. Okay, so what happened here? Right. Um okay, so we pushed up here, we broke the previous high. We did form a bit of a market structure, then we had a breaker structure here. And then we could have taken buys here, but I think this hit stop loss took this buy from here. I think it actually reversed from here. This is where we might have reversed. Exactly. So this was the day, one of the days it didn't work out. We did, if you did take this trade, I mean, you've gotten stopped out. That's basically it. Then I think just gold just dumped and dumped and dumped. I think Friday as well. Friday as well dumped as well. Let's go Friday quickly. Friday, I don't think I traded this simply because we were like in a thick downtrend. So there we can see. Okay, we took out the high. Okay, this might have worked out here. 5 minute quickly. Okay, there isn't really any 5 minute here. Let me just mark out the areas there. Oh my days, did it actually hit this thing? Yes, that would be an insane snipe. Look at that. But I just okay, so we tapped into the 5 minute. We broke above these, we broke below these lows here. We could taken shorts right about here. Okay, we could have taken it as we inverse this gap here, we could have taken shorts here. And then let's see how this goes. Stop loss, of course, would be okay. That did not go too well. Let's see. Stop loss, of course, would be there. It would have probably been hit. It just wicked it and then it's gone. And this didn't work out. Okay, let's look at more examples from the previous week, right? This was didn't really work out this week that well. It worked out 2 days out of the three. Um, the RR was good in those first 2 days, but yeah. Let's look here. Let's look at this one, right? Okay, so here we have the high got taken out here. We have this 5 minute FEG here as well. Then we formed right. And there's also 5 minute here as well. Okay, obviously we didn't tap that. Let me just replay this quickly. Okay, so we basically we have this 5 minute. We didn't respect it, we didn't tap into it, we didn't respect it, then we pushed up. Let's mark out this sort of not worked out that well. Okay, I wouldn't actually technically I wouldn't take this trade because I would have waited for the 5 minute there. But if you did have to take this trade, you'd only take a trade once you broke out of here. And so this would have been like a really wouldn't be the best of trades I would take. Even though it does go and hit your full TP, this is not the type of trades I would take personally. So yeah, guys, that's the type of trades I wouldn't take. Okay, you can see, okay, this did not play out here as well. Look for more setups here. Okay, let's look at this one here. Okay, so you'll see it doesn't really play out that as it plays out, but not that much, right? Okay, so here we formed the Fair Value gap here. Tapped into it here, we didn't respect these ones here. So we look at also that's the 5. Let's go and look at the 5. There's no 5 minute Fair Value gap here on this one even. Okay, did not turn off at the 1 minute Fair Value gap there. Okay, so that did not play out as well. Okay, yeah, this is Friday, 22nd of May. Okay, what happened here now? Okay, so low got taken out, and then we did take out the high. There was this fair value gap here. See here. Okay, this would have played out here. It's perfect. Okay, pushed up there, then we push down, pushed up. You look for a structure. Let's go step back quickly. Right, so let's just see here. So personally, I would only take a trade once you break above the previous high. So we wait here and see. Right, there's a smash place here. But because we pushed up too much, I would wait for the retest back into this fair value gap here. And I will look to see if we respect it. Okay, we did respect it here. TP, we know where's our TP at the highs. Okay, so the nice thing about this strategy, of course, is your RR. You can see the RR is pretty good with this, right? So if you keep your risk management quite good, you're gonna have big trades like this. Egypt scored. Zico, right? Okay, that played up beautifully. That was over 4,560, 4,5. Well, if this was 455, okay, that's what 70 pips that we're looking at here. 70 pips or so. If you hold a runner, would be probably 1,000 pips, but keep your, like I said, keep your TP there. Okay, so you guys can more or less have a idea of the strategy, right? But if you want to obviously I believe, of course, Asia session is probably the best time to trade. But if there is improvements to the strategy, I will update you guys. I will let you guys know more about it. This is still like a strategy that's still basically new, but you guys will see what happens at 7:30. You know what happens. Look at this. I mean, there's sometimes you'll get a massive spike up here. You'll get these big candles coming up at 7:30, right? And so the market starts to move quite a bit at this time often. So that's it for gold. We're gonna be looking at Nasdaq and US30. Nasdaq and US30 is very simple, guys. It's also like Asia session. We traded pretty much the same with the orb. It's a 5-minute orb, not a 30-minute orb. So we'll be looking at that, guys. We'll be looking at that, guys. So yeah, guys, let's see you in the next one.